What's up guys, welcome back to the channel. Today we'll be talking about how to avoid smart money traps. Avoiding smart money traps is simply avoiding areas of liquidity and areas of inducement. Areas of liquidity and areas of inducement in the price chart are areas where large orders are being placed, and in this area a lot of stop loss is resting at these areas. So if you can avoid trading from these areas and you pick the right zones, I'm telling you the truth that you will make more money from the financial markets. You will find yourself losing less trades and winning more money from the financial markets. This example I'll be showing you today, the setup was actually shared on my Telegram channel, and a lot of people were confused and they asked questions like, why did you choose this particular zone? How did you know price was actually coming to react from this zone? There were a lot of questions after that setup was shared. I want to make it more clearer by explaining it in this video so they will understand why I chose those areas and why I chose to trade from those areas. Okay, so that is what I'll be showing you in today's video: how to avoid areas of liquidity, how to avoid these smart money traps. Okay, so this is what I'll be showing you in today's video. So looking from this area right here, what you can clearly see is that price is in an uptrend. This is very clear. This is the 1 hour time frame, but when I actually shared the setup, I think I shared it on the 2 hours time frame. So but looking at this time frame right now, you can clearly see that price is in an uptrend. Very easy to identify, and if you actually try to read the market structure, we can clearly see that price has been breaking structures to the upside. Okay, you can clearly see this is a break of structure. We have another little pullback right here and a break of structure, and price continues that way, break of structure. So with this mapped out, you already know that price is in an uptrend, and this is very easy to identify. It's not complicated in any way. Okay, so if I try to zoom in right now, so we see the price action more. Over here we equally have a little pullback and a continuation to the upside. Over here you see it, this is the recent higher low, and over here this is where we got another higher high. Okay, so very easy. So I'm gonna map it out as another break of structure. Okay, price is in an uptrend. Now we see price moving aggressively to take out this higher low, and from the way we trade, when price takes out our higher low, we can start anticipating a possible reversal. Right after price takes our higher low, over here we see a pullback. You can see it, we see a pullback right here. Price took this higher low, pushed to the downside. Here is the pullback, and here is the continuation of the pullback. Price continues to push to the downside. Now we can actually go ahead, map out this as our change of character, and I hope you all know what change of character is. Change of character, when you see a change of character, is simply seeing shift in market structure. Price is shifting from this bullish market we are seeing right here to a bearish market. Okay, so after the pullback, what do we see? A continuation to the downside, which tells us that price is actually trying to push to the downside. Okay, we are having a shift in market structure right now. Now looking at these areas, you might have 2 points of interest. Me personally, the way I trade, I have 2 points of interest which I will be looking at. Okay, I have 2 areas which I'll be looking to trade from. Firstly, I'll be looking to trade from this zone right here. That's if price can return back to this area, I'll be looking to trade from that zone. And secondly, I have another point of interest right here, okay, which I'll be looking to trade from. Again, this is the 2 areas I'll be looking to trade from. But over here, after we see this accumulation right here, we see price pushing to the downside. And people who don't understand the concept of liquidity and inducement, you will see them making the wrong choice right here, because we now have another break of structure over here. You see, we have another break of structure right here. So a lot of people will be making or taking wrong decisions in terms of the zone they want to trade from. You see a lot of people coming to map out a zone right here without knowing this is a smart money trap. This zone you are mapping out is not the right zone. This is actually a trap. I think I have to change the color to red so you will know that that's a trap. Oh, it's too thick, I have to reduce. Okay, this is actually a trap. Don't trade from this kind of zone. I know some will be asking me why. Okay, looking at the concept of liquidity and inducement, we have many types of liquidity. We have a trend line liquidity, we have support and resistance, that's equal highs and equal lows, and we have accumulation. We have many types of liquidity. The truth is that the market itself is liquidity because liquidity rests above highs and lows. Okay, but talking about liquidity zones, areas that increase the probability of zones playing out, that's when we start talking about equal highs, equal lows, and accumulations, even trend line liquidities. Okay, so looking at this area right here, you can clearly see that this is an accumulation area. An accumulation area for us, this is an area of liquidity. You can see this as a liquidity zone. So anyone that is trying to trade from this area, this red zone right here, you are actually trying to trade from a trap. Okay, this is simply a smart money trap. This is not the best zone to trade from. Just because you see a break of structure to the downside doesn't mean you should come to trade from this area. This is actually a trap, because what you know right now is that liquidity is resting at this area. Firstly, those using support and resistance, here is their resistance level. Okay, and this one lower right here is their support area. Price swept the liquidity at the support area, and the liquidity resting above this resistance area is still there. Okay, the stop loss are still there, those that are trading from that area. And you being a smart money trader trying to trade from here, I hope your stop loss is still above this zone. So a lot of orders are being placed at this area. That is why I said this is an area of liquidity. Now what do we see price do? We see price pushing to the upside. After this pullback, we see price pushing to this upside, sweeping this liquidity. The whole of orders resting above this area has been swept right now, and you can clearly see that price taps into this point of interest nicely, and you can see the reaction to the downside. Okay, so one thing about trading with smart money strategy is trying to understand the rules, and if you understand the rules, try to apply the rules very well. A lot of you know that trading from areas of liquidity is trading from a trap, and they don't actually apply the rules. They know the rules and they fail to apply the rules. When you see me analyzing the market, this is one thing I like to do. I like to build a story. Okay, the same way you see me explaining this right here, when I analyze the market, that's the same way I explain it to myself. I tell myself a story, I build a story around my setup. Okay, I understand what is going on. I try to understand what the price is doing. Some of my friends, when they visit me, maybe when they sit close to me analyzing the market, they'll be like, Solomon, can you shut up for a moment? They don't understand what is actually happening. I'm telling myself a story, analyzing the market, and I'm trying to explain it to myself so I don't make mistake. Doing it that way doesn't actually mean I don't lose a trade or something. In some cases, after analyzing, when I try to take the trade, I do lose trades, which is normal for everyone. Losing a trade or your setup failing to play out is normal, but the thing is following your rules. Okay, when you follow your rules and do the right things, avoid trading from these traps, you will see yourself winning more trades and losing less trades. Okay, at the long run, you will find yourself being profitable. That's the thing you should understand. So continuing to explain, you can see the first setup played out perfectly if you actually chose to trade from this zone. So looking forward and seeing exactly what price did here. So after this setup played out, we have to take another trade, right? Because now we have a break of structure to this downside, and you can clearly see that the candle that broke this structure, these two candles, they pushed aggressively to the downside. Now here was another question people asked. They were asking, why didn't I choose this particular zone? Since we have a break of structure to the downside, we have this imbalance which price is coming back to react off, and they were asking, why didn't you choose the zone? Why did you choose another zone? I have to map it out as red again, so you know that you're trying to trade from a trap. Okay, you that is looking to trade from this area, you're still trying to trade from a smart money trap. There are still traps for smart money traders. If you fail to identify them, you are actually gonna lose the trade. So you that is asking me, why didn't I choose this particular zone? I think this one was a little bit clearer than the one I just explained right here. It's maybe you were not able to identify it, or you don't actually understand the concept of liquidity and inducement. So looking at this area right here, looking at this chart totally, forgetting about this area, what you should understand is that this is an accumulation right here. If you understand the concept of accumulation, manipulation and expansion, right? So what you should understand that this area right here was the accumulation. So price came back here, manipulated, that is manipulation, and here is the push to the downside, which is the expansion, right? The way I teach it, what I teach is that after this expansion, we can actually wait for price to come back to retest any of the zones, and we can look to trade again. Okay, I hope you remember that concept. I've talked about it several times. After accumulation, manipulation here, which is the manipulation, although we were lucky enough that there was a zone which price reacted off, here is the manipulation, and the push to the downside is the expansion. So like I always say, wait for price to come back. So if you miss the first one, you can actually wait for price to come back to mitigate a zone, so you look to trade for the second time. I've talked about that before, I'm very sure of that, like twice on this channel. So you that is waiting for price to come back, mitigate again and push to the downside, can you give me reasons why you're trying to trade from this trap? Because this is very clear. Okay, looking at this area, what can you see from here? You can see that we equally have an equal high right here. This is very clear. You can see here is the first time price came to that area, pushed to the downside. Here is the second time price is coming to the area, we still see a push to the downside, and here is the third time. So this is simply a liquidity area. If you were able to look at it correctly, I have to use red again. This area you're looking to trade from, this is a liquidity area. Price has formed what we call equal highs right here, and we see it as a liquidity area. So trading from that area means that you're trying to trade from a trap. So this was the actual zone I chose, and I shared it on my Telegram channel. I chose to trade from a zone right here. This was actually the one I mapped out as my zone, and I mapped this area out as an area of inducement, because here is looking like a good sell zone, which is not actually a sell zone. This is a trap, and don't next time try to look very well to see these traps. I think I have to bring back the red zone, so I have to play price forward. You see what happened right there. Now price is pulling back, and now you see price taps into the red zone, and you can see the reaction. This zone is actually a liquidity zone. Now you see price giving you a little reaction. So you that is trading, you might be excited that price is pushing to the downside and price has actually respected your zone. Now we see price continuing to push to the downside. If you actually took a trade from here, you would have maybe pushed your stop loss to break even. I don't know how you manage your trade. If you pushed your stop loss to break even, you would have been able to escape without losing money from this setup. But if you actually left it open to play out, I'm telling you the truth, you actually lose this trade. Okay, you see price turning back to that zone, a little reaction once more, and now you see price blast through that zone. The zone has failed because it's a liquidity zone and not a good zone to trade from. Okay, not a good zone to trade from. So this one right here is actually a good zone. Why is it a good zone? We have the manipulation, it manipulated, take out the liquidity at this area. We still have some imbalance that needs to be filled. Now we see price builds liquidity above this zone. So this is a high probability zone for me. That is why I actually shared this setup. So what do we see price do? Now price returns, taps in, gives little reaction like the first setup, returns back again. After this reaction, price returned back to that particular zone. See, it returns back, taps in again. So what price actually did is that after the reaction, it came back to sweep the liquidity at this high before moving to the downside. If you actually moved your stop to this zone right here, price came back, sweeps that liquidity before we see price moving to the downside immediately after sweeping that liquidity. So you can see this is very easy and simple way to identify these smart money traps. It's very easy to identify, and I hope you understand what I just explained in today's video, how to avoid these smart money traps. I hope you were able to understand how to avoid these traps, because if you can be able to avoid these traps, I'm telling you the truth, you will take more accurate trades. Okay, we take more accurate trades, and that is it. So if you still want to learn more about how to avoid these traps, what you should be able to do is to go back to your price charts, look for liquidity areas in the market, and see how price reacts to liquidity areas. If you don't know how to identify liquidity, I have video on where I explained about liquidity. If you don't want to learn it with my video, you can still check out, if you have a favorite mentor, watch his own video on how to identify liquidity areas. So if you watch those videos, go back to your price charts, map out your liquidity areas, map out your non-liquidity areas, and see how price reacts at those areas. This is the simplest way to avoid liquidity zones. Okay, so that's it, and I hope you got value from today's video. If you actually watching me for the first time and you haven't subscribed to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade.